Welcome back to the Dividend Diplomats YouTube channel. You know you got your boy Bert, the Hurt Locker, and you know you're rolling with Lanny, the DD, and we're here to talk about the one, the only AT&T stock. It's back, baby.
But before we get into the details, everybody, please subscribe to our channel, give this video a thumbs up so we can keep bringing you dividend news about all of these great dividend growth stocks, especially as we talk about one of our favorites, AT&T. Ticker symbol T.
Ticker symbol T, AT&T stock back on the YouTube channel. You may be wondering, why the heck are we talking AT&T? Well, first off, in the last 30 days, AT&T stock price is down over 7%, and that's in the last month. But in addition, AT&T just released their third quarter earnings release, and Bert and I are going to peel back the layers. We're going to go through WarnerMedia, a little mobility. We're going to go through data communications. We're going to really see what's under the hood of AT&T stock. Is this a stock to buy based on what we see after WarnerMedia? And is Bert just loading back up on AT&T stock? I don't know, Bert. You might be. I don't know.
We'll find out if you are too, Lanny. And we're also going to cover about how AT&T partner with Visa and BlockFi and Crypto.com to offer you your first ever. I'm kidding, everybody. There's not any crypto offerings here with AT&T, as we were talking about in our last video about Visa and MasterCard. But in all seriousness, we cannot wait to talk to you about this earnings release, especially because, as Lanny said, the price has been down 7% over the last month. And even before the last month, the news about AT&T hasn't been that positive from investors. So it's going to be fantastic and exciting to talk to all of you about some of the positive news and positive numbers, because we do enjoy talking about the good stuff here on this channel.
And you know what? And I'm here to say that AT&T stock, it's not going to be all doom and gloom here, because there's a lot of things that I liked coming out of that earnings release.
Yeah, and that's why we are excited to talk into there. So, all right, everybody, let's jump right into that earnings release and talking about this massive third quarter that AT&T had. To start, their revenue is just a very, very, very small $40 billion during the period. Earnings per share from a diluted standpoint were 82 cents, adjusted at 87 cents per share. That's a almost 15% gain from a year ago. So the results from the top and the bottom line from the consolidated company are looking great.
No, I couldn't have said it any better, Bert. I mean, again, that is with the WarnerMedia, which they're spinning off to form WarnerMedia Discovery sometime probably towards the end of Q2 2022. So we're going to have to wait on that. But AT&T stock price hasn't been positive even after the dust has settled with the news of them spinning that off. Their stock price is currently at $25.23. So even after, that earnings release, their stock prices continue to slide. And again, they released earnings about a week and a half ago, towards that third week of October. The coolest part, that when I was reading the earnings release, I was really focused in on, and I know you were too, Bert, really on their mobile, plans, their mobile phones, because essentially they're going to be a very big competitor to Verizon. And they had total net adds of over, I think it was 2.4 million over postpaid and prepaid plans, Bert.
Yeah, and that's going to become their bread and butter of the company after they spin off WarnerMedia, as you said. So it's very encouraging to see that they've added over 2.4 million new subscriptions and activated plans. That is fantastic stuff. And the other key piece of the continuing AT&T company post WarnerMedia spinoff will be the internet too, because they want to grow that fiber network as well. While they didn't add 2.4 million new subscribers to their fiber and internet plans, they added nearly 300,000. I believe the total was 289,000. So positive additions here on the wireless subscribers, positive additions here on the internet, and that's the core company that management really wants to focus on for years to come.
Yep. And then in the earnings release, mobility revenue was up about 7%. Consumer wireless revenue was also positive as it was up over 3%. I mean, and then when you finally stripped out the WarnerMedia and their adjusted kind of like additional schedules that they add to their earnings release, they had through 3 quarters, $85 billion of revenue from communications alone. And that compares favorably to 80.5 billion through the 3 quarters last year. So up almost $4.5 billion year over year.
Yeah, I mean, it's fantastic results all around. That's why we were so excited. And we keep talking about just the good things when you start peeling back this earnings release and looking at the numbers. So great results here from AT&T from those continuing operational pieces that will exist post WarnerMedia.
I have to ask you, what was one of management's great quotes during that earnings release?
It was, drumroll please, the best postpaid phone net add quarter in more than 10 years, over a decade. They're crushing it. They want to get people on their network. They want to have people getting on AT&T's 5G. Fantastic results.
So again, they've had very positive, strong results. The only downside they had was a little bit from their business revenue was down slightly, down to $6 billion worth of revenue. But again, I know they're rolling out fiber as well out to businesses, kind of competing with Verizon in that arena.
And I'll say one other thing too to add. I mean, even outside of some of those downsides there, we haven't talked very much about WarnerMedia too. You read the earnings release, you can't ignore the fact that WarnerMedia subscriber growth absolutely crushed it as well. So the unit they're spinning off, in addition to what they're keeping the company, also is crushing it. They are firing on all cylinders from a subscriber growth standpoint. Cannot say it enough how excited we are to read these results from AT&T.
You're 100% right. WarnerMedia growing. It's growing at a good clip right now.
And we haven't focused on it as much because, as you mentioned earlier, Lanny, we want to focus on this AT&T investment post spinoff. But you have to at least mention that too, because that's currently today a huge part of their operations.
100%.
How nice is it not to read about also a DirecTV impairment in this earnings release too? It is just so nice to see DirecTV as an investment gone. Talking about how they spun it off. It's off the balance sheet. No longer reading, the value. Here's another $5 billion impairment charge for DirecTV.
Tell you what, though, you could still see it because when they still compare to those prior periods, you still see those charges.
Yeah. Oh, that's absolutely right. So again, everybody, great revenue, great earnings, great subscription ads, great cash flow, fantastic stuff.
So I want to take AT&T really quick through the Dividend Diplomat stock screener. Again, we're focused on the 3 metrics. One, that price to earnings ratio, really comparing it to the S&P 500, as well as to the competitor Verizon. Here we'll look at the payout ratio. We'd like that 40 to 60% ratio as the perfect ratio. Obviously, you want it under 60%. Third, that dividend growth rate. Obviously, AT&T, that they didn't increase their dividend, and what's coming next year.
What's that? No, I'm kidding. We'll get to that one.
An adjustment to the dividend. But and then obviously the dividend yield as the cherry on top. So Bert, in the EPS here, I want to note that we are using really the 2022 EPS target as it's lower by nature because of WarnerMedia, what the analysts are expecting. So Bert, you want to take us through that first metric?
Absolutely not. I'm kidding. Let's go, everybody. Price at the time of this video closing today, as of November 2nd, was $25.23. That EPS we're going to use as $3.20, gives you a low payout rate, PE ratio of 7.88. Significant discount compared to a market that has a PE ratio of in the high 20s, and definitely lower than their competitor Verizon, who's always in the lower teens.
Yeah, Verizon's usually in the 10 to 11 range. So they're definitely lower than Verizon in that earnings for the valuation metric, price to earnings ratio. And even if you wanted to take a 20%, let's call it a haircut to that EPS, you're still at a PE ratio below 10. So
definitely at a discount compared to the competitor and to the market. Let's move into
hey,
that metric.
hey, what are you doing? What are you doing?
All right, let's move into that second metric, the dividend payout ratio. Current dividend today, not for the adjustment we're going to talk about next year, $2.08. Divide that by the $3.20. That's going to give you a payout ratio of 65%. Interestingly, as Lanny said, they are going to adjust their dividend downwards after the WarnerMedia spinoff. We don't have the exact amount of what the new dividend is going to be, but management is talking about targeting a payout ratio between 40 to 50%.
And even if we adjust the dividend, let's take a 40% haircut, say it's only really going to be 60% or $1.25 per year, that payout ratio is below 40% and the yield is almost 5% at 4.95%. So that's us saying that if they reduce the dividend from 208 per year down to $1.25 per year, that payout ratio ends up being almost within that perfect payout ratio, actually even safer. And the yield is still almost at 5% right now with today's price.
Yeah, but we'll find out. We'll learn more, continue to learn more, and we will keep you updated as soon as we learn the news about AT&T's future dividend. Obviously, we've already talked about that third metric, the dividend growth that is not occurring right now for AT&T. Again, there will be an adjustment once the company spin off in 2022. They will no longer be an aristocrat because they will be reducing their dividend going forward. And they did not announce an increase in the current year. So that aristocrat status is out the door for AT&T.
The door is shut, but it may not be shut for good. But we may be in our 50s when they reach the aristocrat status.
The door will take 25 years once again to open.
I'll be talking like this.
All right, dividend yield. Let's look at that one. Currently, with a $2.08 dividend, divide that by 25.23. The current yield is 8.24%. So enjoy it, everybody, before the adjustment comes next year. But as you showed earlier, Lanny, there is a very viable path for their current yield at this price to be 5% after the reduction.
Yeah, I mean, again, 8.24, 8.25% now. After reduction, conservatively estimated, it's at this price 5%. It's very enticing. You can get paid a little bit now, a little bit extra to hold the stock, but then you're still going to get paid pretty well going forward after the stock spins off WarnerMedia. So,
absolutely, yeah.
I will say on a year-to-date basis, the stock price is down over 14%. Then on a 52-week basis, AT&T stock is down over 8%. So really taking in these impacts all into effect, the DirecTV, the WarnerMedia, AT&T stock surely has taken a couple punches to the gut with an uppercut punch from Mike Tyson on this one.
I mean, the shareholders have also taken a few gut punches there too. And our forward dividend income is going to take a little bit of a gut punch next year too. So hopefully we can stop the punching, build the company going forward, and we'll be in better shape in 2022 and 2023 as AT&T shareholders.
So in summary right now at this current price, as of obviously November 2nd, P ratio is below 8, payout ratio is at 65%, no dividend growth, but a yield that has now swelled over 8%. So Bert, what are your thoughts about AT&T stock? Is this a stock?
It is interesting just seeing the metrics. We know their history, we know the drama, we know everything that goes into AT&T, but man, over an 8.25 yield today and a potential 5% yield tomorrow too. With this news, as the price continues to fall below 25, I mean, if you have a few extra dollars laying around, can't hurt to keep lowering your cost basis in T and see where it goes. I don't think that would be the worst case. I could see plenty of reasons why people would do that. I think buying AT&T after all the news in the high 20s is one thing. Buying them at 25 or below is a completely different story. What are your thoughts, Lanny?
You said it right there. The $25 stock price. They haven't quite just hit 25 goose eggs. 25.00 is what I'm saying. I think if AT&T stock gets at 25 or tips below, I'm going to buy at least one share because
You take
it's,
it easy. Hey, take it easy.
I mean, Chef Boy Lanny's going to have to get at least one share
Yeah,
of
no,
AT.
for sure. I just want to get the one transaction that says one share at $24.99 for AT&T. That would be hilarious.
Then I would just slide in at 24.98.
All right, fine. Then I'll get one more $24.97. We can play this game. We can play this game every.
We're playing this game to the bottom. Is that what you're saying?
Yeah, but in all seriousness, the price has now gotten to the point where you have to consider, but it's not just that the price is decreasing. Remember, the results were fantastic this quarter for AT&T, and I think that's also why we have earned bringing ourselves back to the AT&T table. It's not just the price is falling, earnings growth, revenue growth, subscriber growth in all business units, including WarnerMedia, wireless, and internet. Great stuff all around.
Yeah, and again, if you haven't already, definitely give this video a thumbs up. We want to know from you, who's buying AT&T stock at this level? Is this a solid dividend play, a solid dividend stock to buy right now for the yield, get a little bit extra in the meantime, but also for the future performance and this company being reshaped in the future? I want to hear it in the comments, Bert.
Let's hear it, everybody. We're excited to see your thoughts. So thank you again. And just remember, if it dips below 25, Lanny and I are at least buying one share each. So get ready.
You will know it when we either tweet about it or we comment it here in the video if we've grabbed it.
Yeah, absolutely right, Lanny. You want to send everybody off?
Guys, that was Bert and Lanny from the Dividend Diplomats. Over and out.